Alrighty, welcome back to Weenie Trades. So unfortunately, I have a quick red day recap to go over. It was a pretty annoying day. On Fridays, I probably have an extra $20,000 in my brokerage accounts if I just didn't trade on Fridays. So statistically, Fridays are my worst day. Maybe next Friday, I'm probably just going to sleep in. But let's get into the trading recap because there's a ton of lessons. So I'm going to be going over my good trades today and then also my bad trades. So let's get right into it. GameStop. GameStop was up on the day. It was showing relative strength, and we had this nice, good pennant pattern. And as we started to move up, and we started to pen it into this pattern right here, we started to leave. I go ahead and buy GameStop, buy GME with just over 172, 173, call it, with a stop loss just underneath 172. So just about a 1 point stop loss, move higher, pull back, boom, we need to get a nice good push up. I said, I'm likely going to be taking profits off at 179. That's the resistance from the previous breakdown area. So that represents this little area, 177 to 179. Boom, took my profits there on GameStop and then went short at the highs. So going long right here, taking profits and then going short. Nice good round trip trade. Nice good P&L on that GameStop. So that was the best trade of the day. Let's get into another good trade and then we'll get into the bad trade. So mRNA, really nice good move. We did the dip and rip setup on mRNA. We kind of moved higher, pulled back. We started to curl. And then once we started to break out over 278, I went ahead and bought mRNA, buy, and the stop loss just underneath 276, SL 276. So another 2 point stop loss. That worked out pretty well. Took some profits off in the 280s, took some profits off in the 285s, and that was just a nice good trade on mRNA. And then another good trade today was on the SPY short. Even though I got stopped out of it initially, I was thankfully able to stay short. So SPY, massive pull down. I said, I'd love to short SPY, but I just can't find a good risk to reward. Then we started to do this big bear flag. Do you see this? Move down, sideways consolidation. We start to break that and start a new range. That's what's the whole goal of the when we're breaking down bear flags or breaking up bull flags. So we started a new range and we started a kickback rally and then we started to dump massively on SPY. So, that was a nice good short trade, entering short at about 433 with a stop loss just above 433.50. So stop loss is above the level because I'm making money as the ETF drops. We get a nice good low, take some profits off in front of 232, and then just took my last profits off at 431.50. So SPY, nice good little short trade with put options and still swinging just a little bit of a put vertical. So I'm buying the 433 put and I'm selling the 430 put. So that means my max credit is $300 because 433 minus 430, $300. So that was a nice good move, but let's get into the stop outs. This is where the real lessons come in. AMC got me hard today as I was trying to go long on the stock. Yes, I know that it's a bit overvalued, but I'm looking for that short-term squeeze as we're extremely oversold on the daily chart. It seems like there actually really isn't anybody diamond handsing this stock because the stock is failing to break out after being so oversold. That's generally bearish. But nonetheless, earlier in the morning, tried to go long on AMC. We got the nice good dip and rip set. We dipped. We started to rip. I go ahead and buy AMC. Just over 37.50 with the stop loss just down here. Get a nice good push up. Not enough to get my partial. I was targeting about at least the 38.74s, the high 38s. Couldn't get it and had to stop out. That's okay because I wanted to give AMC another chance. We've spiked the high of the day and then pulled back. And then as we started to curl and do this nice good little flag pattern, I got triggered in just over 38 on AMC. And unfortunately just had to stop out. And this time I stuck with the 3 strikes rule. Net, minus 127 on AMC. Nasty little stop out. Let's get into the next lesson. At least I was able to lose less by just stopping out. Save myself a ton of money from AMC dropping. And that's just money that I don't have to lose. So to me, it was a good trade. Just didn't follow through. The diamond handsers aren't diamond handsing. My worst trade of the day was on coin, and it was really just the expected move. I used the wrong option strategy for what occurred on coin. So Coinbase had this morning high, 227, massive dump. Then we had a nice good little bull flag. Do you see that? We kind of moved up and then we went sideways for a bit. We move up, we go sideways, and then look, we start to pop. This would have been the ideal entry. So most of the time, if you see that, be like, okay, I'm either going to get it as soon as we break out You can buy right there, put your stop loss down there, and then it rips. Or you can just be like, okay, I just missed it. There you go. Don't take it off your radar. But me, I wanted to get long coin today. And I even said, oh, 227 might be the good dip buy. Well, I saw coin make a higher high, and then we started to make a nice, good ascending triangle near the highs. I was like, well, coin is pretty oversold. Maybe we can get a decent rally. So coin started to do this nice, good ascending triangle, double top. We start to break out. I go long Coinbase just over 230, and then I add over 230.50. And it was just a little bit too high. Breakout didn't happen on Friday. Follow through is minimal. It's a repeated theme. I need to understand that you can't expect the stock to just rip on a Friday. Even though it may look good after you get in, it could just be a false breakout, which is what it was. We moved higher, false breakout, stop out. And the real tragedy of Coinbase was that I was selling puts. So I sold puts same day expiration. And the worst case scenario when you sell puts is the stock absolutely tanks. Well, Coinbase was only expecting about $1.50 expected move at that time, but the volatility and volume started to increase and Coinbase started to really dump. So my selling the puts was the worst possible scenario, and I had to stop loss out of those puts underneath 227. Nasty expense trade on coin, minus 440. Would have put me green for the overall day if I just didn't take that coin trade or just did the right strategy for that stock. So that was coin. Worst trade of the day. Next up, we've got NVIDIA, and NVIDIA was just an unfortunate stop out. Extreme fear and panic on selling. NVIDIA's down almost 15% from the highs, and NVIDIA, massive waterfall sell-off. It is starting to get a little bit climactic. So I would like to grab the dip buy in NVIDIA at about 690 if we get there in the future, and maybe in front of 700. Maybe a little bit of a nibble at 720. I do like the shares for long term. But nevertheless, today we're already oversold, and I was trying to dip buy NVIDIA. So NVIDIA, we made a little hump. That's a sell setup. Should have shorted NVIDIA right there. Underneath 760, that would have been an amazing trade. But I was looking for the dip buy. I wanted to go long NVIDIA. I wanted to get long the name. We started to spike 750 and curl up. I go ahead and buy NVIDIA right here, just at about 750 with the stop loss just beneath this pivot. And I bought it, and then boom, stop loss. And NVIDIA, we started to drop and we started to curl a little bit. I bought NVIDIA again. Buy NVIDIA, just at about 743, stop loss hit. So I'm just getting chopped up by NVIDIA. Really weak name. I was expecting a bit of a bounce into the 780s today, if not next week. That does not look like the most likely scenario now based off the market, which we'll get into a bit. But net NVIDIA, same thing. Buying a call option, which I'm glad I stopped out on. I saved myself $300-400 by stopping out of that call option. But, you know, NVIDIA, the calls got clapped, the shares got clapped, the put credit spread got clapped. Every single strategy got clapped because it was just a massive move to the downside that was not expected by the options market. So NVIDIA, would I take that trade again? Under normal market conditions, yes. In this market conditions, maybe in hindsight, of course, I wouldn't, you know, because the trade didn't work out. But as one of those things where I was confident in it, I sized into it, and I just happened to stop out. And that's why I like staying as Weenie Trades. Keep the trades small size, and you can't lose big, but you don't make as much either. But it really focuses on that longevity. So every time I try to size up, it just doesn't seem to work super well. So it's definitely, you know, it could just be a random string of bad luck. It could be a little bit of skill, and time and statistics will tell me the true answer to that. It was just one of those kinds of days. Baba, I was short Baba, had a really good entry up here at about 213.33s, and I had the genius idea to move my stop to 213.01, and I just stopped out. So I'm selling first, sell first, initial stop loss up here. We get a nice good move down in Baba, but then it started to curl up. I put a stop loss basically at break even, and Baba tagged that break even, and instead I didn't get to enjoy the nice move lower on Baba all day. So it was just kind of one of those days. It was just one of those annoying little things. But, you know, stay tuned for the weekend game plan. That's going to be super important. SPY coming up. We could be in correction territory. Short term, we might get a bounce because we're a little bit oversold, but we're starting to get a little bit more sell signals on different indicators, on the price action, on the divergences, on the broadness of the market. So keep an eye out on the SPY. We might test something as low as 425 and maybe something as low as 420 in the next coming weeks. Otherwise, if there's a kickback rally, that's meant to be sold. And so now we have more bearish. We have the shift in market sentiment. So today was that first kind of stop out. Boom, get smacked. But now we can go short and short the rallies. And we can buy oversold dips. I'm excited for the volatility that's about to be coming up. So, trading isn't easy. Don't let anybody tell you differently. If they are, great. That's great for them. It's easy for them. That's awesome. I always say I'm not the best trader in the world. I'm not as cool as some of these other YouTubers making hundreds of thousands of dollars or tens of thousands of dollars. I will toot my own horn and say that I am one of the best charters probably on the planet, but I still need to develop my discipline. I still need to develop my management. I need to develop my size. I need to work on not over trading as much. And so those are things that I'll just have to work with and develop if I want to continue to be a trader. So days like these, they happen. It's slightly unacceptable. I'm happy in some areas of my performance. I'm not happy with other areas of my performance. Thanks for listening to my diary and have an amazing weekend. Bye-bye.